Good morning, everybody. I just want to make sure if everyone can hear me properly. If you could just type that out in the chat, that'd be awesome. Okay, awesome. What I'm going to start off with is I'm going to start off with a trading plan. I get a lot of questions like, hey, okay, some people are having problem hearing. One sec. Okay, so it's recording and we're good to go. Okay, so I have people asking me that okay, they are trying to they're trying to trade at the same time I trade myself, but then at the same time, once they get into profits, their stop losses are being hidden, or for some reason they may be over leveraging and they're getting margin calls, or sometimes like they're not sure if they're taking their profits at the right time. One big reason for that is that you don't have a trading plan. I can't stress this enough how important it is to have a solid trading plan. So once again, what I'm going to do is I'm going to lay out a small template type of thing where like how I use my own trading plan. So I'm just going to do that. Here, okay. First thing you want to do is you want to pick a pair. Let's do this. First thing you want to do is pick a pair. Now, if you've been trading for quite a while, you would be comfortable with certain pairs. Me, when I started, I was comfortable with the USD CAD. I was comfortable with the USD JPY. I was also trading GBP USD. But as time went on, as I refined my trading over time, I realized that hey, I don't need to trade 3 pairs or five, 6 pairs, because there was a time where I was trading 10 pairs. And when new people start and they say, well, you know what, we don't want to miss out on opportunities, so we're going to start off by trading 5 pairs or 6 pairs because we want to take trades all the time. Doing trading is not about trading all the time. It's about having the freedom of time, having the freedom of finances to spend time with your family, right? So that's why it's really important to pick a pair you are comfortable with. For example, me myself, I mostly trade gold, and because I've been trading gold for the last 2 months, I've been trading gold nonstop. So I just recently added USD JPY. Oh, sure. Okay. One sec, guys. Show screen, everything. Okay. So I just added USD JPY. Right now, I had some questions. People said that, well, you're trading 2 pairs. I'm trading 2 pairs because I'm comfortable with my first one, which is gold, and then I just added USD JPY because I want to get into USD JPY too. Sometimes, for new people starting on, I wouldn't really recommend gold because you need to graduate to gold. Because USD JPY itself, it's pretty okay. It's volatile in some markets, but then gold is twice as volatile, right? So that's why you need to trade USD JPY first and then graduate yourself to gold. So that's what I do. My pairs are gold and USD JPY, just 2 pairs. The next, what you want to do is you want to set a timetable. You want to set a timetable to trade, right? It's just like trading is just like working out, right? So you go to the gym, right? You go to the gym at a certain time of the day, and then you have your meals at a certain time of the day. There are certain meals you're gonna have. You're not gonna eat junk food. You're maybe gonna have one cheat day, right, where you can eat whatever you want. And then you go to the gym, and then you work out certain areas of the body, right? Trading is just like that. You need to pick out a pair you need to work on, you pick that out, and then you set a timetable, right? It's not like you have to trade all day, every day, right? That's number one, that's gonna mess around with your head. Number two, if you have a significant other, it's gonna interfere with your relationship. Like it's so true, it does, right? Because like people say, oh well, you're trading. I thought you were trading so we could spend time together, but you're trading 10 hours of the day, right? So you're not contributing in our time. So that's why it's really important to have a solid timetable. Now, I don't want you guys to copy this, but my timetable is 8 a.m. to 10 a.m. Actually, 11 a.m. Right? That's my timetable in the morning, and then in the evening I trade from 6 p.m. to 9 p.m. That's it. In the middle, I don't trade at all, because what I've seen, me personally as a trader, that if I trade after 11 a.m., there's a 50% chance that I'm going to lose a trade, right? And I'm not going to risk that, because if I'm being profitable between 8 a.m. to 11 a.m., I don't want to risk those profits by trading after 11 a.m. when I know that 50% of the time I'm going to lose a trade, right? Same thing goes in the evening from 6 p.m. to 9 p.m., right? I'm not going to trade after 9 p.m. because I know that I'm going to lose, so I don't deviate from my times. It's really important that I have a timetable, and since I have this timetable, I'm free to do like a lot of stuff during the day. I can go help out my family, I can go hang out with my friends. Like, I have a lot of time, right? So it's really important to have a solid timetable and stick to it. Next one, really important, is have a daily goal. My personal daily goal is 5% to 10%. Now this goal is it's pretty high when compared to like well, it's not really high, but like it's a little risky, right? I wouldn't even say it's that risky. Like it just fits my trading plan. It fits my personality. Like I'm more of a very like go guy. So I don't mind trying to do 5 to 10% every day. Mind you, that's being done between 8 to 11, and then between 6 to 9. Right? It's really important to have a daily goal. Now, some people ask me that, what if they have a daily pip goal? Daily pip goal is, I don't think that's very important, because having a daily pip goal, you're not really focusing on increasing your capital, right? Because let's say your account is at $500, right? And your daily pip goal is, let's say, 550 standard pips. Actually, let's say your daily pip goal is 100 standard pips, right? So if you're catching 100 standard pips on 10-cent lots, or let's say on 5-cent lots, right? That's really not going to increase your capital, and that's going to make you overtrade, because you want to catch more pips so you can increase your capital, right? So let's do some math. Let's do some math over here. So let's say your daily goal is 5%, right? Your daily goal is 5%. Your account is at $500, right? So 5% of 500 is 25 bucks. 5% equals $25. Okay, so every day you want to make $25 on your $500, right? That's your 5% goal. So now, what do you have to do? What lot sizes should you use to make that $25, right? What you can do is you can use a 2-cent lot. You can use a 10-cent lot. If you use a 10-cent lot, how many pips would you need? Right? That's what you got to ask yourself. If you use a 5-cent lot, how many pips are you going to need? Right? What kind of setups are you going to hunt for? Right? So it's really, really important to have a percentage goal. And here's the good thing about percentage. Let's say you're starting off with $500 and you're aiming for 5% a day. Let's say Actually, let's say we go a little bit conservative and you're starting with $500 and you want to aim for a modest 2% a day, right? That's pretty real, right? So multiplied by 1.02. So your second day is going to be at 510. Third day, fourth, fifth, sixth, seventh. You see? So after a week, your capital is going to be at $563. You got to look at the bigger picture always, right? So one big thing which comes into this is you need to control your greed, and the way to control your greed is to have a timetable where you can trade, right? The big thing is to not overtrade. Most of the times we get caught into let's say if there's news at 11:30 a.m., right? There's news at 11:30 a.m. The charts are going wild. You're looking at 5 minutes going up and down, and there are like people messaging in the chats. Oh, we caught like 1,000 pips. We caught 10,000 pips. We made $1 million. And you feel now. Obviously, you're gonna feel like, oh shit, I'm missing out. You're not missing out. Like if you try to trade at that time, you are over trading and you are risking your profits for losses, right? So that's why I don't recommend deviating from your trading plan ever. Never, ever, ever do that. Never. It's like I can't stress this enough. Like I'm ready to kick guys out of my group if they don't follow the trading plan, and then when they come to me saying that, oh, I'm losing trades because you're not following your trading plan. Look at guys like Ted and Raghav and Elias and me. There are a bunch of guys in my group too who are fucking killing it. Why? Because they have a trading plan. They know when to trade. They know what their goal is, and that's what they do every day in and day out. That's it. It's not that hard. So this is basically my plan. It's not that hard. I have a pair I want to trade. I have a timetable where I wake up. I actually wake up at 7 a.m. and then I know I have to work from 8 to 11, and then in the evening I have to work from 6 to 9. It's a tough 3 hours, 4 or 5 hours. It's not that hard. And then I know my daily goal is what I have to do every day is 5 to 10%. That's my job. That's what I have to produce from the markets. If I don't do this, and then that's okay, right? Because trading is more like you're being an entrepreneur. You're like providing for yourself. So you have to set those mental goals. And the only way you can achieve them if you have a strict routine. Like the first week, you might not be able to hit your goals. That's okay, right? The next week, you'll be a little closer. The third week, you're gonna bang on hit those goals. So as you get comfortable, you're gonna start increasing your daily goals day after day, right? So it just comes with time. Okay, trading plan done. Okay, it's really important. So after this webinar is done, I want you all to have a solid trading plan, right? Just 3 points. Pick a pair, timetable, and daily goal. That's it. It's not that hard. Okay. Forex intro. Now, in this, I'm going to go over the very basics. Very, very, very basics, okay? It's not going to be it's going to be a quick intro on pips, using lot sizes and smaller accounts, bigger accounts, support resistance, price. Actually, I'm going to include these candle exhaustion support resistance into the Forex intro, and then we're going to go over the New York Open, London Close, and Asian Open. Okay, let's go here. Okay, so currency pairs. Just have a question. Okay, so actually let's look at USD/JPY. USD/JPY is a mess. Actually, we're gonna stick to gold here. Okay, so when we are looking at, let's say, let's say we're looking at a chart, right? Let's say we're looking at a chart. Let's have a clean chart over here. Let's do this. Naked chart. Okay, naked charts. Whenever you're looking at a chart, you want to look at your daily time frame, right? You're looking at your daily time frame. You're looking to see like what's happening, right? So for gold, we have a bunch of stuff happening here. Now, let's say this was a fresh chart. Let's say I've never looked at gold, so this one we'll look at gold, right? You have your candlesticks. You have your price on the left, right? Every point move is 1 pip. I'm sure till now everyone knows this, right? Perfect. And then what you do is, it's very basics. You draw your supports, and then you draw your resistances right over here. And then you look for, what I like to do is, now these are my main resistance and my main support, right? Now in the next week, price, I'm pretty sure price is not going to go till here unless something drastic happens, right? So you can draw another support. Let's say there's another support over here, and I guess that's it. And then you want to go into your smaller time frames. You go to your smaller time frames, and then you look at more support and resistances. Let's say there's a resistance zone over here, which you can see. It was resistance, resistance, resistance. So it's kind of like a zone over here. And there's another zone over here. Now, most people have misconceptions about, like, I still get questions on, oh, okay, so my resistance is at 1217.75. Is that like a good resistance? I'm like, well, it is, but support and resistances are not actually a set price. It's basically a zone, right? So that's why there are terms called the supply and demand zones. I'll be really honest with you, I'm not really sure which one is supply and demand, like if it's the top one or the bottom one. I'm not too sure, right? I just look at candles and I trade. So I'm going to go and say that this is a resistance zone and this is a support zone. Okay, so zones are basically, now when people see me drawing rectangles, these are the zones I'm drawing, basically. That's it. This is what I'm drawing. This is my resistance zone, right? Because zones are a set of prices, right? They are a set of prices from where market price can reverse. Questions. Do you think support and resistance zones work better on higher time frames other than on lower time frames? No. If you're drawing support and resistances on all time frames, zones work the same way. They're all the same on every time frame. Trust me, on every time frame, they're all the same. But obviously, like, let's say I have my support and resistance zone on the 4-hour is how many pips? Is almost 400 pips, right? So obviously on the 15-minute, my resistance zone is not going to be 400 pips. It's going to be smaller, right? Because it's a smaller time frame. So these are the set of prices. You see here, price came over here, it got rejected from this point, and then it consolidated and came down. And then we had this zone here, price tried to break out, and then it started to come down, right? So it's not a set price, it's just basically zones. And if we draw zones here, we will have more zones in this area. Like this will be another zone. Actually, till here, right? So for me, zones are basically areas of consolidation where price. Now you'll see price rally, and then you'll see price, like, it will stall, like, it will consolidate, and then it's going to continue moving. Okay, so if you see here, price came down, it got into this zone, it tapped this zone, it started consolidating, broke out of the zone, came back into this zone, consolidated, and then it went back up again into this zone. And then it consolidated here, came back down, came into this zone, and then started to consolidate again. This is what I do. Support and resistances, and I just basically support and resistances are just for me to know that when should I be really looking at price action, right? Price action trading is like really, really important. So let's do the zone over here. Okay, if we go into smaller time frames, go into 15-minute, and then we can see some more information here. 15-minute time frame, there's support, there's another support, and obviously this is a very, very good resistance. This is a very, very good resistance. Like, this is an amazing resistance. Actually, this could be a really good trade when market opens, because look, we have not wicks. The thing about wicks is that wicks are extreme prices. Now, you guys might hear people say that, especially Elias, I kind of learned this from him, that a pair will reverse once it grabs that premium price. So over time, what I've started to understand is that premium prices are grabbed by wicking, right? So if you see right here, it wicked down and it came back up, started to wick down again, came back up, and then wicked down again, right? And then you can see this. Now, this is a premium price. I don't know what premium prices are, or like if there are a set of premium prices, or let's say someone tomorrow asks me, oh, so this wick is wicking at this price, is this a premium price? I don't know, right? I don't know. You just have to watch in the moment. Like, I had no clue this was a premium price over here. This price here, I wasn't sure this is a premium price until I looked at the chart right now that this is a premium price right over here, because look at these wicks. These wicks are touching this zone and then they're reversing. So what might happen over here, that it might reverse, right? So this is what I'm looking for. I'm looking for wicking, and then I'm looking for to see if price is actually it's doing the same thing as it did in the past. So it's really important that you look in the past. Okay, and so these are support and resistance zones. That's basically what I look for when I try to take my trade. Okay. If you guys have any questions on support and resistance zones, we're ready right now. Okay, perfect. No questions. Awesome. Everyone knows support and resistance zones. Now, what I'm going to do is now I'm going to go over candle exhaustions. Okay. 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 Candle exhaustions. Let's go to a document here. Actually, let me erase all this highlighter. Erase all drawings. Candle exhaustions. Candle exhaustions, the way you spot candle exhaustions are long wicks side by side, small bodies, bulls to bears, or bears to bulls. That's candle exhaustions. You're looking for long wicks. You're looking for small bodies. Now, wicks have to be longer than the bodies. Now, there's no set size that how big a candle should be or how big the wick should be when compared to the candle body. Like, it's all relevant to what's happening in the charts. Like, people ask me, oh, so let's say the wick is 2 inches long and the candle is like 0.5 inches long. Is that like a candle exhaustion? I don't know. Like, look what's happening next to those candles. I'm not sure if that's a candle exhaustion. Like, you know, it just doesn't work like that. So let's go into the charts and let's spot candle exhaustions. Okay, so let's see here. We're gonna look for, actually, what I like to look for is, now since I'm scalping, the way I'm explaining things, I'm explaining these things in a scalping view, right? From a scalping perspective. I don't swing trade, I don't hold trades for more than half an hour. Like, if I do hold trades for more than half an hour, I'm going to probably lose that trade. So I don't hold trades for more than half an hour. I hold trade for like 15 minutes max. That's it. Max, minimum 2 minutes. Believe it or not, minimum 2 minutes, maximum 15 minutes. So we're going to go in the smaller time frame, and then we're going to look for candle exhaustions. Okay, so let's look over here. So now, candle exhaustions. Exhaustions occur when we have wicking action, right? So let's say we had this area over here. This area here. Now, this could be a good selling opportunity. So now what you see is, you see that, okay, now this is a small zone we have. This is a resistance zone right over here, right? If you go on the left, there are no candles here. So this could be a good resistance zone. So let's say price came on top and then we saw these wicks, right? We saw this one wick. So you could say, okay, we have this wick. So the next candle is going to be a bear candle because we have a bear kangaroo tail, right? So this is what we learned in the book Naked Forex, that once you have a kangaroo tail, you sell because it's going to go down. But let's say if this wasn't a 5-minute chart, let's say this was a 15-minute chart, right? So you waited 15 minutes for this candle to close, and it's a kangaroo tail. You're like, okay, perfect, I'm going to sell. So you sell, but what happens? Price goes up. And then you're like, okay, well, it starts to go down. You're like, okay, so now we can sell. Or you're thinking like, okay, well, maybe this is a bull candle now, so price is gonna go up now, right? Because you're not waiting. So then the third candle forms, and it's a bear candle with a long wick, right? So once you see these wicks are exhaustion. Like, price is exhausting from this point. Like, it all comes with practice. The more you look at the charts, the more you're going to get comfortable with watching wicks. You're going to get comfortable with waiting for wicks to be formed. You're going to get comfortable with, okay, like, now this is a good setup for me, right? So if you look over here now, we had this bear kangaroo tail, and then we had another wicking action. So now you wait, because the next candle, you need to wait for this candle to basically finish. So it finished as a bear candle. If I didn't have this information, at all this stuff wasn't visible, I would be safely taking a trade after this candle closed. Why? Because this candle's body is longer than the previous candle, and I have wicking action here. There's a lot of wicking, there's a lot of price rejection, which tells me that now after this, price is going to go down. Now, people ask me, how do I enter on wicks, right? So the way that happens is, once this candle has finished drawing, I'm basically just visualizing. I'm visualizing that the next candle is going to go up, and then it's going to start to come down, right? That's what I do. So when this candle starts to form, I'm going to take one sell over here, and then I'm going to wait for this price to retrace so I can take more sells, right? I'm taking that risk because trading is like, you have to take a risk, right? You have to take a risk. You can't be afraid. Like, the thing about risk is, you're taking risk on the most profitable setup, right? You're not taking risk on the context of saying that, oh, like, this is going to go my way, so I'm gonna take a risk because I hope it goes my way. There's no hope in trading. If there's hope in trading, you will lose. If there's hope in trading, you will lose a lot of money. You will be very, very disappointed in like why you're not making money. So you need to wait for probable setups. So that's why I wait. When price retraces, I start taking sells, and once it continues to go down, what do I have? I have sells on a wick, right? And it looks very impressive because that's why I say, like, I'm trading wicks because I'm waiting for price to retrace and I'm taking sells, and then it continues to go down. In this case, it didn't form a wick, right? But that's okay. I still had that one position. I could write it down, and then that is it. Okay, so these are price exhaustions. Let me go back to the mouse here. Okay, I'm open for questions on price exhaustion or like candle exhaustion. If you guys have any questions, shoot them right now. Okay, let's go through these questions one by one. Okay, so I have a question here. There's one where I'm confused in the exhaustion, rejection and low, to then rise and fill those ranges that leaves. Okay, so I'm going to go over ranges a little bit later. Actually, I'm going to go over ranges during the simulation. Okay, so I have a question. What made you sell on the third candle rather than the first? Purely because the 15 minutes is more reliable than the third one was close to the 15. Okay, so this question is basically like, okay, what made me sell on the third candle than on the last one? Because, okay, the reason why is because I normally wait for 3 candles to form. Actually, I wait for 2 candle confirmation. Because if you're counting on 1 candle to be formed, that 1 candle might be a fake out, right? Like, because people say that, oh, we have dojis, that means that the price is going to reverse. Okay, so let's say you took a sell around, let's say you took a sell after this candle, right? Because you saw this candle, you're like, okay, so I have my first confirmation, so I'm going to take sells, right? So why I didn't take sell on this candle? The reason is because this could have been a fake out. So I'm waiting for a second candle, and then I'm waiting for a third candle, right? Now, if I'm waiting for the second candle, and if I take sells here on the second candle, I'm willing for the price to go up. I don't mind that because I know that if price goes above this area, it's going to continue moving up, and then I'm going to close my trades because that's where my mental stop loss is. I'm going to close my trades, right? So you need to be willing to hold a drawdown. I hold drawdowns all the time. It's very normal. I hold drawdowns, but the thing is, you need to know when to exit a trade, right? So that's why I wait for 2 candles or 1 candle, and if I'm not sure, if I have even if my doubt is more than 20 to 30% in my mind, I don't take that trade at all. I don't take that trade. It's just me. Like I'm very conservative in my capital. Okay, so another question. It's here. As that particular candle did not form a wick going up, would you only take 1 position? Yes, I'll only take 1. If I'm feeling good, I'll just keep on taking positions. It's based on my trading plan. It's based on how I've seen things in the past. It's based on how comfortable I am with that pair. Plus, it's also based on what time of the day it is, right? Like if I'm trading during the time where I normally trade, I will add positions to it. I don't mind that. Okay, does the candle have to be 2 wicks, top and bottom, or not always? It depends on where the wicks are, right? Because if you have candle exhaustion, the exhaustion is going to be it's going to be one way, right? It's going to be either on the top or it's going to be at the bottom. So you will know. So let's see. Let's take a look at this area here. Right, so you had this bull move and then you had this candle here. This candle is not an exhaustion. This would be an exhaustion if this candle had a wick too. So you could say, okay, so we have 2 big wicks, price is going to continue to go up. Right, so that's exhaustion. Even right over here. This is also price exhaustion, right? But you need to wait for candles, right? So because you have 1 confirmation, you have a second confirmation, so you're waiting for a third confirmation, right? Which doesn't come. So this would not be a trade. I wouldn't take this trade because I don't have confirmations. And trades, guys, come all the time. If you miss a setup, just wait for the next setup. You know, always follow your trading plan. Let's say this setup happened at 11 a.m., right? And you missed it. So you're going to be like, okay, like, you know what? I'm going to wait for the next setup at 11:30, right? So that's not going to happen because that's not in your trading plan. So you always got to follow your trading plan. Okay, let's go over here. Take one position. Okay, do you check on higher time frames to find confluences? Yes, I do. I'm going to go over that during these simulation. So is the 3 confirmation rule you are talking about based on 5-minute time frame only? No, it depends. It depends on what time frame I'm looking at, right? So let's say if I'm looking at 15-minute time frames, I'm going to be looking at 15-minute. So basically, guys, it all comes down to practice. Like when you're looking at one pair for so long, unconsciously you would know how it's going to act, right? This may sound weird, but it's very, very true. Like you need to know how pairs act. Like if watching pairs is I can't really explain it. Like it all comes with intuition. Like if you're like I've watched gold for the past 2 months straight, you know, every day I watched gold. So I unconsciously know how gold is going to act at a certain time of the day, or I unconsciously know how gold is going to act if it's creating certain candles, because I've seen gold moves on all time frames so much that it's in my head now how it's going to act. It's just like how you unconsciously know when you go to the gym, you know what you're going to work on, or you know certain exercises unconsciously, right? So if let's say you are good at basketball, right, and you unconsciously know how you're going to throw the ball so it goes into the basket, right? Now I suck at basketball. I don't know, right? So if I ask you, hey, so how do you throw the ball in a basket? What are you going to say? You're just going to say, well, you hold the ball in a certain way, and then you just throw, and then you practice that throw until you perfect it. Training is the same way. You watch one pair, and you keep practicing it. You keep practicing it every day, following your trading plan, and then a time will come where unconsciously you would know how that pair is going to move at a certain time of the days, right? It just comes with time, guys. It's just like tying your laces. Like you can tie your laces without looking unconsciously. You can just do it, right? Trading is just the same way. Once you look at a pair for so long, the time comes where you just do it, where you just take the trade, where you see a price doing a certain thing that you've seen it done over the past weeks or months. You just do it. It's just that simple. It just comes with time, guys. Don't worry. It's going to come with time. Okay, so explain why the one to the right of the X is not a trade for... Okay, I'm going to explain that in the simulation. Okay, so price exhaustion. We're all good on the price exhaustion. Now let's over here, let's see candle exhaustion, support resistance zones. Okay, got support resistance zones done. Candle exhaustion is what I look at. Basically, I look at just wicks. Okay, so New York open, London close, and Asian open. Now, guys, people ask me all the time now that how do I trade New York open or how do I trade London close? To do that, you need to look at the times, right? Now, I'm not going to tell you guys this with the intention that you guys should copy this. You know, this is a part of my personal trading plan. This is what I do every day, right? This is what some people I work with, they do this every day because we've really refined our trades, right? So this might be a little bit of a cheat code for the times to trade on. So just be very, very mindful of that. New York open. New York opens at 9:30 a.m. Eastern. Okay, 9:30 a.m. Eastern. When I start to trade, I start trading at 9 a.m. Eastern. This is when I'm looking for a push. 9 a.m. Eastern, I'm looking for a push. I'm looking for a push on all time frames. I'm looking at the 5-minute time frame, I'm looking at the 15-minute time frame, I'm looking at the hourly, I'm looking at the 30-minute, I'm looking at 4-hour. I'm looking at all time frames, and I'm judging to see like how the candles are being formed. It's very, very important to know how candles are being formed. It's so important. I can't stress this enough. It's so, so important because let's do this. Okay, so let's say you're looking at 4-hour, right? 4-hour has 4 1-hour candles. 1 hour has 2 30-minute candles. 30-minute has 2 15-minute candles. Okay. 15-minute has 3 5-minute candles. I watch these. So I do. I watch these. I even look at the. I even go as far as saying that 1 hour has 4 15-minute candles. Candles are basically what will make you money in Forex. Like, you know, it's that simple. When you're looking at price action, you're looking at candles and how candles move. It's just very, very important because you're looking at candles, how big the candles are, how big the wicks are on candles, how one more thing which guys ask me a lot, well, guys and girls, because we have girls too, is that what if the wicks are penetrating like prices, or what if the wicks are like big and smaller? Well, wicks are not basically where price is moving, because let's say we're looking at this candle here. Let's say we're looking at this candle over here. Okay, so when you're looking at the wicks, wick is not a solid price. This is just a range. This is just a range which price covered, right? This is just a range which price covered. And this is your actual price. This is, now I look at prices as like, this is what the candle has inside of it, all these prices. This is a price range, right? So this price range is, this price range is these prices, 24 pips. That this is the price range. And this is, the wicks is where the price tried to go, but then it couldn't close, so it closed above, right? It opened at the bottom, it closed above. This is a candle you're looking for. Wicks are just ranges, you know, and these ranges are always covered. And I'm going to go over these wicks and ranges when we do the simulation. My simulation wasn't working for the past week, and I've finally started to work now. Okay, so it's really important you look at the candles on all time frames, right? So let's go into our daily time frame and move these. Okay, so let's draw some shapes over here. Let's draw this here. Okay, so now this is also in a way that I'm going to analyze like what's going to happen with gold when market opens. So daily candle formed a bullish kangaroo tail, right? So price came down and it got rejected from this zone over here. Right? So we had this resistance, price came down, it wicked, exhaustion, and it started to go up. And then it came over here, price wicked down to this area, and then it got exhausted and moved up, right? This is on the daily. So we're going to look at 4-hour. Okay, so this is what happened in the 4-hour. Now, one daily candle has 6 4-hour candles, right? 24, 4 times 6. So yeah, 6 4-hour candles. 1, 2, 3, 4, 5, 6. 6 4-hour candles. So see, this price came down, and in the 4-hour you can see clearly it came down and it got rejected from this point and it went back up, right? So it went back up to the point that this is another zone we see over here. It got rejected over here, right? So I'm going to remove this rectangle. No, it got rejected at the zone. Now let's go into our 4 hour. Let's look at some more information of this. This is what I do when I'm looking for trades. And I'm going to 1 hour, and then I see now this 1, 2, 3, 4. 1, 2, 3, 4. So 1, 2, 3, 4. So what I see here is on the 1 hour I can see more information. Now if I look left, right? When I look left, I see this as a strong zone. This is a very, very strong area. What price is this? This is 1191.63, right? So if we go back, like, you know, there's no price. Even if you look over here, right? This is a strong zone because we had consolidation, price came down here, got rejected, came down here, and then got rejected again, right? And if I go back again, like, price failed to break out of this zone, and there's nothing. There's nothing. Let's go back even more. Like, so you see right here, this is a strong zone. Like, price is like really respecting this zone here. This is amazing. Like, look at this. The only way price broke down into this area was because it was in momentum. It was in such a strong momentum that it broke down and just stayed into this zone, and then it couldn't go back up. You know, so I think we are in a pretty hard zone that the price is going to have trouble breaking out of it. Perfect. So we have the zone, and I think now price is going to probably break to the downside when market opens, or, like, you know, during New York or Asian. So let's look at more information. Let's look at the 30 minutes. Now, this is really interesting. Okay, now one trades I take. Oh, Lee, I'm getting pretty excited right now. Some trades I take is breakouts, right? Breakout trades. Now, this would be a great trade for me to take if it's probably going to be a sell. Why? Because you see this upper trend line, right? You see this upper trend line, and if I were to create is support zone, which could be around over here, or maybe around here, actually in this area. So this is what I'm going to do. I'm going to create a zone around here. This is the zone I'm going to be looking at. Okay. What I'm looking for. Now what I'm thinking is, I'm thinking that price is moving up, it's creating these wicks. This is exhaustion, right? This is candle exhaustion. It's creating these wicks, so it's going to break up. But you see how price exhausts itself on the 30-minute? It comes up, candle bodies are smaller, right? So we're like, okay, it's definitely respecting this price over here, right? So now we're going to look at some smaller time frame. It's going to 15-minute, and then we can see some more information over here. Now I can see that first of all, let's see how far price is from our zone here. Price is like a good 14 pips, 150 micro pips, right? So this could be a nice small scalp I could take. So on the 15-minute, what's going through my mind is that, okay, we had this uptrend, price is trending up, and then it's exhausting itself. Like it has one touch, two touches, and then it's trying to, it tried to break up, but it couldn't, and it's like forming this hanging man candle or a shooting star or whatever you guys call this, right? So it's creating this, which means it could break down, right? So let's look at 5 minutes, and we have more information here, right? Now you see how when you look at smaller time frames, you get to see more information. this area here, very important zone. So it could come down here. So what I look for is now, one thing which I've been noticing with gold and with the USD JPY is that you have this trend line, right? I've just recently noticed this in the last week, something new I've learned, that if this trend line is going to be broken, right? Once the candle closes below this trend line, it's going to continue falling hard. It happens all the time, right? So this is what I'm going to be looking for when market opens. I'm going to be looking for something to push this down for me to take a nice sell. That's what I'm looking for. Okay, and let's see over here. We're going to take a small 5 to 10 minute break, and I'm going to be right back. Okay, in the meantime, if you guys have any questions, just shoot the questions in there. And if you guys are having some audio problems, let me know. And we're going to address those when I come back in 5 minutes at around 8 a.m. Eastern. Hello, hello. So we are back. Okay, let's go over some questions here. Um, hmm. Okay, so will we be going through the certain pushes? Yes, we will be. You look entries on 5 minute. I basically look for entries on, well, not 5 minute. I basically look on entries on all time frames. I try to see where candles are being formed and where I'm getting like the best price to enter. I'm going to go over that in the simulation because every trade is unique itself. Every trade is very, very unique. Okay, London close. Yeah, we're going to be going over London close. I'm going to be going over New York Open, and I'm going to be going over the Asian push. So, since this webinar is called cheat code, I'm going to give you guys the cheat code, right? So, cheat code in a way that if you trade 9 a.m. Eastern every day, you're going to be profitable. You know, but you just gotta keep watching. You just gotta keep practicing. You just gotta keep watching the pairs at those times to know that, okay, like how is it gonna affect it? Okay, so let's go further now. Candle exhaustions was done. Let's go over here. Okay, we were at the watching the different candles. Okay, so now what we're going to do is I'm going to start off the simulation. What I want is maybe in the Facebook chat or on the WhatsApp group I have, I just want like a couple of random dates so I can start the simulation on like random dates so I can go over the wicks, ranges, and how I take my entries, how I take my exits, and explain all that in like a live simulation. Election night, no, not election night. I don't trade news. Someone said November 12. November 12. Okay, we're going to do November 12. Let's go over here. Let's do November 12. Close these questions. Okay, so file. Okay, May 16. November 12. November 12 is a Saturday. November 12 is a Saturday, Anthony. Actually, you know what? Let's do Monday. Let's do Monday, November 14th. And let's do it till the 16th. Okay, we got gold, the 15-minute spread, and this is, oh, 14th is someone's birthday. Perfect. All right. Okay, so close this. No, I don't want to close this. A lot of information on that chart. Okay, so I have 15 minutes. Okay, question. You know I'm the Professor X, okay. Okay, and let's see where more questions. Okay, when there is a new coming, how long after and before should we wait out? And what type of new? Only red hat? Oh, news. Yeah. I normally don't trade news. If I trade news, I just trade retracements. Trading news is very, very risky. Like, it's very, very risky. It can. The thing about news is there are two types of news. Okay, there are two types of news. Let's go over this. Okay, two types of news. One affects economy. Two doesn't affect economy. It's just that simple. One news are like which can like well, let's say there is NFP, right? Or there's the CPI numbers, or there's the GDP, right? Those news are basically, actually, let me bring up a thing I did. I'm going to bring this up over here. Interest rates, no, let's see. There was a document I had here which had all the high volatility news on there, which I sometimes trade. Here's charts. Okay, this one here, I'm going to place this in the Google Drive after the webinar. So basically, these are the news. These are the high volatility news, right? So things like interest rates, like non-farm payrolls, things like GDP, CPI, like the GDP, interest rates, CPI. These are the news which affect the economy. Like these numbers are which, like, let's say there's a news happen and it says CPI news, it's going to affect the economy and the price. Let's say if it moves up, it's going to continue moving up, right? If the news is good, GBP USD is going to continue to move up, right? And there are certain news which, let's say, there are trade figures, or let's say the retail sales, like some news like that, which don't affect the economy. They will move in a, let's say if the news is good for the US and the news is something that's not going to affect the economy, it's going to move bullish, and then it's going to move back, right? Then it's going to move back, like what we saw on Friday. Was it on Friday or when was it? Not sure. Was it on Friday or? Let's see here. There's some big thing happened. Yeah, it was this right here. It was this right here. Now this news, I'm not really sure what this news was, but it wasn't. It didn't affect. It didn't affect the economy. Like the news came out, and the news it wasn't really affecting the economy, right? So the news was bad. It pushed USD/JPY down, and then it retraced back up because it wasn't really concerned how the economy is doing. It was just a number that this is what we think are the numbers, right? Or this is what we think is happening in the news. So it had an effect, and then it came back up, right? So if the news was in a way that, okay, now US is doing bad, right? Let's say if they said, okay, US is doing bad, and these are the numbers, so then it would have continued to go down. It would have continued to go down. So that's how I go about that's how I go about with the news. Was the Friday news? Yeah, it was the Friday news. GDP, durable goods was good, both bad. Yeah, for sure. So that's what I do. Like if I generally don't trade news. If I do, I'm mainly looking for retracements, or I stay out for 15 minutes or 20 minutes. If wick is bigger than the body, the pressure to sell by is weak. Yes, that's true. So we had this big wick, means that there was a lot of buying pressure. So it went up, and then it created this big wick, which means there was a lot of selling pressure. So it went down again and then up again and then down again, right? So this is what was happening on Friday, right? This is why I don't normally trade Fridays, because with all this, this is very confusing. You don't know what's going on. My MT4 is stuck. Okay, yeah. You don't know what's really going on. Like, it's up and down and up and down and up and down. Now you're stuck in this range. That's why I have this range drawn, because you're stuck in it. Like, you don't know what's happening, right? And I honestly think this could break to the upside. So that's why I don't trade Fridays, I don't trade news, because of all this. Just so confusing. So I just stay out. Okay, back to the meat and potatoes, as Elias used to say. Meat and potatoes. Okay, so I'm going to start this, what date was it? '14th, okay. 14th, and let's see if it's working. Okay, perfect. So let's get the chart here. Now, what I'm going to look for is, you have to look for all time frames. It's very, very important. Now, we're looking at 15-minute time frame right now, and what I would say is that we also need to look at the 1 hour time frame, the 30-minute, and so on, right? It's very, very important that we keep those in mind. Okay, so we have a 5-minute over here, 1 hour, 4 hour, 1 hour, 4 hour. What am I missing? I'm missing 30 minutes. Question. Let's put in 30 minutes. Uh-oh. Okay. So when you're doing top-down analysis, I'm looking at 4 hour, right? So this is very interesting. If you look at 4 hour, we are sitting at some sort of support area. Okay, this is resistance here, support. So we're sitting at this area, actually, and we had a big wick on the 4 hour, and it was in a downtrend. Actually, let me look at the daily as well. Now, I'm going to do this simulation in a way how my thought process works, exactly how my thought process works. Okay, next chart. Okay, so daily. Daily had a big push. Wait, is this the elections? Yeah, this is the elections. Okay, someone give me another date. I don't want to trade the elections because it's too predictable. Like, I'll sell here and then I'll hold the sell and I'll make 100K, Someone give me a random date. August 16th. Okay, let's do August 16th. I just realized this was the elections. I'm so silly. Oh, what am I doing? Okay, so what was it? August 16th, and let's do it till August 18th. Start. Put my lot sizes. On a 10,000 account, what I use is, let's say, we'll go with like point. I'll go conservative, let's stack 0.5s. Yeah, because we got to manage risk. So let's go over here. Make a chart. Okay, and we got our 15-minute. We have 15-minute, 5-minute, 1 hour, 4 hour, 30-minute daily. So let's look at daily. So daily, what do we see here? We see that we had some wicking. We had a push up here, and then we had a push down. Right, so what that basically tells me is that it's probably going to come down. It came down over here, and then we had these wicks, these big wicks, if you guys can see. We had these big wicks. So these big wicks, they indicate exhaustion, right? We're looking at daily, so like one daily candle is a lot of 15-minute candles, right? There's a lot of pips. So I'm not going to base my judgment off of just 1 or 2 daily candles, right? Because I'm looking at like the overall picture. We had these wicks here, big wicks, so there was a lot of selling pressure, but at the same time, we have I guess we have tapped into a support zone, right? And the support zone is pretty strong. It's so strong that the daily wasn't able to break out of it. That's how strong it is. And then if you look at the 4 hour, we see that the 4 hour has formed there was a bullish move up, and then we had a bearish move down. So what this tells me is that the 4 hour is probably going to come down, right? That's what I think. Now, the reason why is because there is a bearish candle here, and then there's another bearish. This could be making a top wick for a continued move down, right? Which we don't know yet. So we're going to go into our smaller time frames. Let's go into our 1 hour, and let's take a look here. When I see this one out, the market just opened. Okay, market just opened. This is 6 p.m. This is 6 p.m. Eastern. This is 6 p.m. Eastern, and normally New York, normally Asian opens at 7. Yeah, Asian opens at 7. So what we're looking for is we're looking till Asian opens, right? So normally what we do is we see a push at around like 15 minutes before Asian open, and it continues into the 7. It continues after Asian opens as well, right? So that's what we look for. Let's look at 30-minute. Okay. 30-minute is 30-minute is now I'm going to draw a support zone over here. So that's really interesting. So now when market closed, okay, let's see questions. So questions, in case you want to know the spike. This is in case you want to know the spike, okay. I'm not sure what the spikes happened because I'm just going to look at it right now. Okay, so 15-minute, and then let's speed it up a little bit over here. And let's see how this 15-minute develops.
Okay, we're just going to let this 15-minute develop for now and then see how candles develop here so we can just judge. Okay, so someone's telling me that there was news. August 16th. Okay, let's look at news on August 16th. Actually, you know what? I'm not going to look at news. I'm just going to trade. I'm just going to trade based on technicals. I don't care about news. I'm going to trade on technicals because I believe that all news is already priced in, and it's just already priced in, right? And that's it. I'm just going to trade. I'm just going to trade as if I'm trading based on technicals because all news is already priced in, and when you're looking at smaller time frame technicals, the technicals dictate how the news is going to be and where it's going to go. I'm just not going to look at the news at all. I'm pretty ballsy. Okay, let's let this 1 hour develop. Let's look over here. So it's going. 5 minutes. Okay, so this is 6:15. This is 6:30 candle. Okay, this is 6:30 candle, and let's see over here. I'm going to look at 30 minutes. It's still bullish. We have these wicks over there. You have these wicks, but it's also at some sort of a resistance area. Look at 1 hour, look at 5 minutes. We're still going up slowly. And then we're just going to go back to 15 minutes and let this 6:30 candle finish. It's really important that you wait for candles to finish. Like, I can't stress this enough. It's really, 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 really important that you let the candles finish. Because if you don't let candles finish, it can go like against you so fast. So it's really important that you let the candles finish all the time. Okay, so it's still going. Question: are you expecting some push up in the beginning of Tokyo session? Move up or down? I'm looking for a push up. I'm actually looking for a push up, right? So I'm just going to wait for these candles to finish actually. And then I'm going to look for a push up. I'm going to try to take a trade and then I'm going to try to look for a push up. Okay, so let's let this finish. Okay, so now this is the 6:45 candle and we have a 5 minute over here. It's being formed. And then 1 hour is still pushing up. 6:45 and then 30 minute is also pushing up. So what I'm going to do is I'm going to take a buy. I'm going to take one buy over here. This is going to be a test buy, which I'm going to take. Okay, 0 pips. My spread is 30. So I'm going to take a test buy. Oh, it's pretty high. Okay, whatever. I take a test buy and then let it around over here. Let's see, short trades, 20. And look at 5 minutes, see how it's forming. Okay, it's forming bullish. Now, here's the important thing. I'm also looking at, the reason I'm looking at 5 minutes is because I see now we are in an uptrend on the 5 minute, right? We are trending up. So here's what I'm thinking. I'm thinking that this this area here, we could be moving up to this price here. What's this? This is 1343. We could be moving up to this price, 1343, right? So if I look at 1 hour, and if I see 1343 is around here, right? So there's a pretty good chance we can move to this area, or there's also a pretty good chance that we might move to these wicks, right? These wicks, because these wicks are ranges, and these ranges need to be covered, right? So that's why I'm taking my buys on the account that it will continue to move up. If you look at the 30-minute, we are in an uptrend, so it might continue moving up to this point here. Okay, so we're just going to let this run, and let's see how this 15-minute candle finishes. In the meantime, let's answer a question. That looks so beautiful, those candles. Yes. These are bullish candles. Okay, so let this run. Price is retracing. Taking more buys. So when price is retracing, right? And also, if you look at 5 minute, you can see that on the 5 minute, we have reached a resistance zone, right? You see right here, this is a resistance, this is also resistance, resistance, resistance. So price in the past has had some issues breaking out of this zone, right? Price has had like big issues breaking out of these zones. So price is probably going to stall at this area. It might continue to move down into this area and then continue to move up. Because if you look at 30-minute, 30-minute is also moving up. Now on the 5-minute, it might seem that price is going to go down, but if you base your trades off of the 5 minutes, then you're going to be misguided, because there are a lot of fake outs that happen on smaller time frames that they do on the bigger time frames, right? So that's why if 5-minute, it's not making sense to me, so I'm going to look at 15-minute, right? 15-minute, if it doesn't make sense to me, I'm going to look at 30-minute, right? Because 30-minute shows me a clear direction of an uptrend, right? It's a clear uptrend. And if 30-minute, for some reason, it doesn't make sense to me, I look at the 1 hour. Yeah, okay, double tap, okay. And then if 1 hour makes no sense to me, I look at the 4 hour, right? I look at 4 hour and see what's happening. So in the 4 hour, I see that we are creating an uptrend. It's not a solid uptrend, but we are creating higher lows. We have these higher lows here, right? So let's see how this trade goes, because I'm going to be looking to take buys on retracements, which I normally do. And just going to let this run. I'm also going to look at the time to see what time it is. This is Asian Open. Asian has just started, Asian session. So let's look at 5-minute, and you can see information in the 5-minute that we have broken out of this zone a little bit, but we still have this area to cover right over here. Questions on my group? Okay. So we're gonna let this run. Now, when price is retracing down, it's normally creating wicks. This is what I like to see. When price retraces down, I just say that, you know, like it's just creating a wick, right? So that's okay. If it's creating a wick, that's okay. But where do you place your stop loss? Now, let's say price continues to move against me. Where am I going to have my stop loss? So my stop loss is going to be below this candle. Below this candle, I'm going to close my trades. Or if I want to be really, really safe, I'm going to draw this trend line here. And when price breaks this trend line, or if it closes below the trend line, that's where my stop is going to be, right? And what I'm aiming for price to reach this area here. Even this area. No, actually this area here. This seems more achievable, right? And then we can have like a nice trade. How big is it? It's like 130 pips. Okay, so it's retracing. I take buys and just let this run. You know, and then I take another buy over here. It's retracing. And now, if you see the pips tell you a lot, right? So you see now, on average, like my stop loss is going to be around 120 pips, right? So right now, my main position is like the negative 50 pips, you know, so that's okay. I would still, like, you know, literally, I would still wait for like 50 more pips because this candle hasn't finished yet, so I'm just going to wait. Take some buys. Wait for this candle to close. And I don't really mind holding positions, really. Let's look at 30 minutes. Okay, it seems fine. 1 hour seems fine. Could be just creating a wick. This is really important. It's really important to have confluences. Important because now on the 15-minute, it might have seemed like, oh, like, you know, like we're going to continue to move down, but it was just creating a wick. How many trades do you take for a setup? I take around 15, 10 trades because I like to diversify my risk, right? Like if you look at my free margin, I still have enough free margin here, right? So I took some buys here and then I took some buys when price was retracing, so I'm diversifying my risk, right? So that's based on my trading plan. I'm going to go over risk management at the very end, right? So that's why it's very important. So now 15-minute, it was looking to me it's going to move down, but it didn't, because if you look at 5-minute, you see we are still in this zone. And this is just a minor retracement in this zone. So to me, it seems like on the 5-minute, we're just consolidating. And then if I look at 30-minute, 30-minute is still respecting the trend line. Like, you know, 1 hour was just creating a bottom wick. You know, so I think this bottom wick is for a continued move up. Look at 4 hour. 4 hour is, okay, we still have some time for the 4 hour to close. So I guess we're going to continue with this trade and then see if this could be a profitable trade. Okay, let's run. Okay, there's still 5 minutes left for this trade to finish. Let's look at 1 hour. 1 hour is still doing fine actually. Let's see here. Okay. Then this might be a long trade. I just don't like holding trades. Just hate to hold trades for a long time. Okay, and alright, so right over here, I'm probably gonna exit the trade because it doesn't seem like, well, we still have Asian Open, because Asian Open push, here's the thing with Asian Open push. Asian Open push goes till 7:30 Eastern. It goes till 7:30 Eastern. So what I'm going to do is I'm going to hold it, and I'm going to hold it till 7, like a little past, like the middle of next 15-minute candle. I'm just going to hold it. Okay, and at the same time, I'm going to look at some smaller time frames. Now, I'm going to wait till, actually, you know what, I'm going to stop right over here. Now, at this point, I'm going to see how this candle closes, because at this time I see that we are filling a wick. We are filling a wick range over here, and this could be a good time to close the trade, but since I'm greedy, I'm just going to let it run up a little bit more. In the meantime, I have a question. Well, really see the importance of candle closing. Sometimes I just exit quickly. Yeah, like, you know, it's really important to, so the comment is that I really see the importance of candles being closed. So sometimes I exit quickly to avoid larger drawdown. So yeah, man, it's really important to wait for candles to close. Really, 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 really important that you wait for candles to close. Let's look at one out. Okay, so I'm just gonna, actually, you know what, I'm gonna take my profits here since this wick range is being filled. Okay, so you take into account the RR. No. Risk reward, no, not at all. I don't take into account that. Close my trades. I don't look into that. The thing with the risk reward ratios is that I think now the thing with risk reward ratios is that if you're doing swings, right? Let's go back to my document here. Actually, let's go over this. What? Okay. Risk reward ratios. Now, the thing about risk reward ratios is, now let's say if you're doing swings, right? If you're doing swings and you have, let's say your take profit is 1,000 pips, right? And your stop loss is 500 pips. Then you're doing a risk reward. Then you're like, okay, my risk is 500 and my reward is 1,000, which means my risk reward is 2 to 1, right? So, but when you're scalping, you're not looking at risk reward. Like me personally, I don't look at risk reward when I'm scalping because that's not part of my trading plan. I'm looking for quick pips, and that's all what I'm looking for. When I get my quick pips, I exit, right? Sometimes my drawdown is way bigger than what I'm willing to profit, right? So that's just dependent on my risk. That's just dependent on how I see things. It depends how the market is moving in that certain time, right? So that's what I basically look for. So this is the first trade that I take. It's on the Asian Open. And this was at 7 p.m. 7 p.m. Eastern. The next push happens at around 8:50 p.m. Eastern. Cheat codes, big cheat codes, right? This is when you have to keep looking for those trades to happen, right? So now I'm just going to wait till 8:50. I don't care what happens, you know, between now and 8:55. So I'm just going to wait. Let's see when the next time is. 3. So Just gonna wait and see how this candle develops. Okay, it's going. Okay. Oh, I think we can have a trade over here. No, gotta follow my trading plan. Gotta follow the trading plan. Let this candle develop. See now, if this was moving up, if you would have taken buys, you would have been a drawdown. So we wait. We wait for confirmations. You took the first 7 p.m. and that's 8:50? Yes. Yes. Or if I see something in the middle, I try to take that trade. It just depends how candles are being formed and how much volume is present. This is volume. I don't really look at volume. I just it's just I just look at the candles and the wicks and see what's going on, and then I base my trades off of that. Speed it up a bit. Let's go, Speedy Gonzales. Let's go. Okay, smooth it up and down. Looks like 1 hour is trying to push up. Oh. Uh-oh, question. How many setups do you take per day? 4. 4 trades a day. Take 4 trades a day. That's it. 4 trades a day. Nothing more. Maybe less, but 4 trades a day. Nothing more than 4. If I take more than 4 trades, I'm over trading. I guess we're going to break down. Oh, we broke down. Okay. This is the last candle. Okay, let's stop over here and let's look at price action. Let's look at 4 hour. 4 hour is still trending up. 30-minute is also trending up right now. So let's let this run and let's see what happens. Let's see how this candle closes. I'm a big fan of letting candles close. Could it move a little slower or no? Oh, I know. Daily. Let's close daily. Let's see. Oh, perfect. We have some speed over here now. Got some pump some steroids. Okay, so this candle is, whoa, too fast. Let's see now. 1 hour candle is pushing up. You know what I'm going to do? I'm going to take, what I see here is we are testing this trend line. We tested this trend line once and twice. And if you look at 1 hour, 1 hour is trending up. Let's see how 30-minute closed. Where is our 30-minute? 30-minute right over there. 30-minute closed with this wick. We have this consolidation area. So I guess on the next push down, we should try to take a sell. Let's try to take a buy actually. Let's take a buy on the next push down. take a buy, one buy, and okay, so it's moving faster than real time, like really fast. More buys here. Okay, so let's look at 5 minute. It's wicking. 1 hour looks good. Still moving down. Take another buy. Their trades at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades, and let's look at 5 minute. Okay, looks good. 15 minute. Okay, let's let it run. We are going, let's see where we're going on the 5 minutes. 5 minute is still trending. Well, on the 5 minute, in an uptrend, we have this consolidation, but we are still in an uptrend. So we'll continue, let this run. Uh-oh, we have, let's take another buy over here. Let's take one more buy. And I guess that's it. That's all the buys I want to take. Oh, I'm just using a 0.8. I thought I was using $1 lots. Question, okay. Don't you take into account those 15-minute upper wicks? These ones? Stop loss. Yeah, my stop loss is 150 pips. See this? This is all in pips. My stop loss is 150 pips. So when it goes 150 pips, I close all the positions because I'm aiming for 200 pips, you know? So I'm aiming for 200, 250, you know, sometimes like my stop loss is going to be, now the thing with that is like when there's a lot of volatility, your stop loss is going to be large because when you're trading gold moves really, really fast. And in volatility, gold's going to move against you and then it's going to move in your direction as well. So you need to have, you need to take that into account as well. Okay, so I'm just going to let this bad boy run. No, let's this one. Should I take another position? No. Questions? Yes, I use a mental stop loss basically. Let's look at 5 minutes. How 5 minute is wicking. We have these wicks. Now this is where I'm concerned. These wicks. Now at the same time, what you want to do is you want to look at the charts with an unbiased perspective, right? That means you got to look at it in a way that it can go either way, right? Because if you're aiming for an uptrend, we have an uptrend here, and then at the same time you have a downtrend. If it hits 150, you get out straight away, or always wait for a candle to close. It's based on my judgment, based on how much I'm willing to lose, based on how much I'm willing to make. Like, you know, it's just based on that. My stop losses, take profits. It's based on my trading plan, and you need to have your own trading plan to figure out when you will exit or enter the trade. Would you have taken this trade if you saw it on a real account, or are you just showing us an example of it first? No, I would have taken this trade if this was on my real account because my MT4 is stuck right now. Ooh, okay, there we go. Yeah, so okay, I would have taken this on a real account for sure. All the trades I'm taking here, I would have taken on my real account. So you got to look at this idea too. Like this is in a downtrend, so like, you know, it could break down. You know, it could also break up. So you're always doing like probabilities. You're always like willing to see like, okay, like what are the chances that's going to go my way? And you're going to look at the 4 hour, and on the 4 hour, the bigger time frame, I see that it's trying to push up. So it's probably just gonna keep pushing up. Like that's what I'm basing my judgment on. So let's hit play and then let this trade develop and see what happens. You know, let's at least let's let this 15-minute candle close. Let's speed it up. This does not look good. Okay, still have some area here. This 1 hour candle, it might be forming a wick. Might be forming a wick down. So let's take 2 positions here. And I guess my stop loss is going to be around here. So I'm going to keep my stop loss. So this stop loss is 50 pips away from here and 130 pips away from my other positions. Okay, perfect. Oh wow. Look at this. What's happening on the 5 minute? 5 minutes. Okay, so see these zones? 5 minute broke out of this range, came back down, tested this range again. You see this wick? See this wick? It tested this wick range again, and it started to move back up. You know, on the 5 minutes. So 30 minutes is also it's doing okay. So let's let this 15-minute go. This trade took me for a ride. And we're just looking at pips, 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 pips. Always look for pips. 40 pips, 30, 50. Okay, it's going pretty fast. At least with this kind of finish. 4 minutes left. Okay, so now if I look at 5 minutes, I can see that we have a lot of buying pressure. Now, if this 5 minute candle closes above the trend line, we're going to 1343. You know, we're going to 1343 for sure. Yeah, we're going to 1343. We're definitely filling some wicks. Definitely filling some wicks. Let's 1343. Okay, so see this trend line. If it closes above this trend line, we're going up to 1343. Okay, so now managing trades. This is what I do to gain maximum profits. Now these trades have reached 127. I'm going to close them. Close them. And I'm going to then I'm going to let these run. Looks like we are going to 1343. And there we go, 1343. Are we going to get 1343? Someone says 1343, 1343. Let's go 1343. And 5 minutes, 15 minutes coming down. If we look at 5 minutes, we have a lot of buying pressure. And now, this is the thing about momentum. Now, when price is in momentum, it will fill the ranges. 100%. It will fill the ranges no matter what. Like, you know, it's just going to fill those ranges when price is in momentum. So price is in momentum right now, and it's going to fill this 1343 range. So can we get 1343? Actually, can we get some wick entries over here? Let's get some wick entries over here. Would you wait to enter on trendline test, since I would only enter buy if it retested? I wouldn't wait. I wouldn't wait. I would just, I wouldn't wait. If it retests the trend line, let it retest it. Like, you know, whatever, let it retest it. But I like my wick entries. If it continues to go down, I'm going to take more buys, but let's see how this develops. And this is the second 15-minute candle. And let's look at 5 minutes. Let's look at 5 minutes. Okay, see, we consolidated. When price moved up in momentum, it tried to consolidate. It consolidated. Consolidation basically means that it's refueling. I see candles as cars, right? And I see consolidation as gas station. So the car moved up really fast. It stopped at the gas station. It filled up some gas, and it's going to continue to move up. And we're going to get 1343. Can we get 1343? Does someone want 1343? 1343 is what we want. That's it. We will exit at 1343. On this point, you'll add more positions. Yes, I did on the wick. And this wick confirmed that, okay, we have some buying pressure. So let's let this go, and let's see if it fills 1343. I love the way you trade. I love the way I trade, bro. I love the way I trade. Actually, like, you know what? I'm going to close half of these positions, half of my old positions right over here. Close half of them, because what if the price moves against me? Because someone said there's some news or something, so I'm just going to close these positions, half of them. And let them run. Can we get 1343? 1343. We have profits locked in, and can we get 1343? Actually, we did 10%. Can we get 1343? 1343, 1343. Who needs 1343? Again, 1342, 1342, 1343. Just need 1343. Let's look at 5 minutes, and let's see. I guess we're going to get 1343, guys. 4 hours is trending up. 1343. Should we aim for 1343 in the 4-hour wick or 1 hour? Let's look at 1 hour. Let's not get greedy. 5 minute is in a uptrend because after the consolidation it's moving up. So I guess we're going to get 1343. 1343, 1343. Let's get 1343, and we have 1343. Perfect. So we're going to close 100 pips, and put a trading stop. Put a trading stop on these bad boys. Put a trading stop and close these two bad boys. And just let it run to profits. Let's see where it goes. You know, trailing stops are important because they follow you. Wow. What's happened over here? Was this news? Has to be news. Okay, so I guess this was news. And the 9, this was, I think this is the, what was this candle? This is the last 15-minute candle before the 9 a.m. push. So I guess this was the 8:45 push. What did we write over here? 8:50 p.m. Yeah, this was the 8:50 push. Look at 5 minute. 8:50. Right on the dot. This was the 8:50 push. This is the 8:50 to 9 p.m. push. This is the second trade I take. You know, so I don't know what happened, but again, this did happen, and then I think that's it. We hit our take profit. This is the 2 trades I take on the Asian session. That was the 8:50 push. Is this order management platform available live? No, this is not. This is the simulation. It's not available live. So I'm running out of time. So quickly, we're going to go to the Asian session, and we will trade the Asian session, the New York Open actually. We're going to trade the New York Open. So let me figure out what the New York Open is. New York Open on this would be 4, 12, 16. 16 is 10, 15. 16, 15. 15 is New York Open. 15 o'clock. MT4, 15 is New York Open. 15, and let's go to 15. Yep, for 1343 and up. We got 1343 and we are up. These trades are not in my trading plan right now because I just don't trade at these times. So additions, again, let's go to 15. Wow, gold just flew. This is a beautiful 1 hour. Okay, let's go to 15. Yes, we need to take into account the trend at all times. Very, very important. Trend is up, and the trend is up. Let's go, let's move fast, and then we're going to go to New York Open. Now, someone said there's news at New York Open. Let's see how that affects us. Let's see how that affects my trading. Let's see how news respects the supply and demand zones. Let's see how good we are at those supply and demand zones. And I've been trading news based on supply and demand zones. I look at news just so that I know what's going on, and just gonna let this go till that vertical line is New York Open. No, that's New York Open is at 9:30. That vertical line is like 9 a.m. And if you trade every day at 9 a.m., you will be profitable. So I'm just gonna wait till it gets to 9 a.m. Then let's see what happens. 16th August. Okay, so yes, David, I'll explain how it fills the ranges. So since we are reaching that area, let's look at, I guess we have one more candle left. Yeah, so, okay, stop right here. Okay, so we have 11 minutes left till 9 a.m. And questions. Okay, if the question is not related to what I'm doing right now, I'm going to answer these later. Now let's look at 1 hour. Now, we have this area here, this area of this key area. This is key area. Okay, if price breaks this area, it's going to continue moving up. Right, this area, this zone over here. If price breaks this zone, it's going to continue to move up. This is what I think. If it doesn't, then it's going to continue to move down. So it's really important to also know what the news is. So I'm going to look at the news. Actually, let's look at the news. Let's look at what the news. Actually, no, I'm not going to look at the news. I'm a price action trader. You know why will I look at news? No. There is news, but I'm not sure what the news results are. So the first 5 minutes, 5 to 10 minutes, maybe 5 minutes, is news effect. And then it just, I guess it moves the opposite way. So this is the 9 a.m. Let's see this, let's watch. 5 minute, 1 hour. 1 hour is still going up. 30 minutes is still going up. Now this is the thing about filling ranges. Pause this. Filling ranges. Filling ranges is that if now price is trending up, right? On the 4 hour, you see, okay, price is trending up. You still have this range to fill. This is like 200 pips away. We have this range. On the 30 minute, we have this range to fill. This is like 100 pips away. So this could be a good trade which you can take to fill this range. On the 1 hour, you still have all this range to fill. On the 15 minute, same thing here. You have this range to fill. So even if you take like a safe buy, if we take like a safe buy, we take a bunch of buys, you know, it has to fill that range. It will fill that range. Mind you, the stop loss is still 100 pips, 100 to 150 pips, so maybe I just gotta make sure what the stop loss is. And this 15-minute candle will take buys, take a buy. 30 minutes creating wicks. Uh-oh, this might not be a good trade. So I'm going to close it right over here. Okay, so question. So you see the overall move, see overall confluences, you saw up movement trend, and then you knew that we'll have volume 7 to 9 p.m. You looked at wicks, that could be filled, and simply trust your analysis, buying even when the price is trade. Yes, yes, you have to trust your analysis. You have to trust your analysis. There's like, it's so super important. So we have wicks over here, and this is trending down. So we have another wicks here. So I'm just going to wait for 15 minutes to close and to see where the direction is, because there's news as well, and I'm not really sure which direction the news is going to be. So I'm just going to wait for this 15-minute candle to close. Question. So 9:30 is always the big push following the direction of the slight before. Yes, so 9:30 is a big push. 9:30 is a big push. But when there's news, it can go either way, right? Because the market has to set up for the news. I guess the news is at 9:30 or like, what time is the news? Can someone just type it in? Let's see now this. I guess 15 minutes is going to create a wick. Now, if 15 minutes was to create a wick and continue down, it would have created a wick around here. Because if it goes above the body, it's going to continue moving up. If you look at 30 minutes is creating a doji. We still have no information that's going to continue to move down. See these dojis, even see 4 hour, we're still in an uptrend. So if I draw a trend line, let's draw a trend line. Let's draw a trend line over here. It's beautifully respecting this trend line. Questions? Okay, and then we let this run. Let this run, let this run. I guess we're breaking to the upside. 15, okay. Let go, let go. This is New York Open with the news. Let's see how this 15-minute candle closes. I still think it's going to continue to move down. So what I'm going to do is, now my analysis says that from this zone, it's gonna fall down. Like it's gonna fall down. There's no way that's gonna break this, and then it's gonna continue to move up. It has to fall down, and I think the market is setting up for that fall. That's what I think. I hope that happens, but that's what I'm thinking. So let's see. Maybe it might wick and then go down, or like whatever. Let's see what happens. I'm just going to keep in mind that zone. Keep looking at 1 hour. Let's see some questions. So I think the news already happened because the push-up news after 8:15. Okay. So let's see. This one. Okay, so we gapped up. We gapped up on this. We gapped up on this, and let me quickly take a look. We're breaking out of the zone on the 4 hour. We still have this area. Still have this area here on the 4 hour, and this seems like a good. This area here. This seems like a good area, good rejection area, because the thing with the pushes is that price will push in one way, but it needs a lot of momentum. Right now, what I tend to look for is when there are big pushes. Now, price, it will retrace after it grabs a premium price, right? So premium prices are prices which have not been reached in the past. So if you look at the 1 hour, the price we are at right now, it has been reached in the past, right? So I'm going to try to take a sell if it goes a little bit higher. And then I'm going to continue to take sells when it continues to go a little bit higher. Okay, we are up, and I take 1.0, take a sell. I should take 4 cells because I want to take 15 cells in total. Let's see here, we are still going up, and I guess my cutoff point could be around like 13. Around here. This could be my cutoff point at 13.59. If price reaches 13.59, I'm going to exit my trades. I'm going to exit my trades, so I'm just going to wait. Because this is a big zone. This is a big area. So I'm just going to wait to see what happens. I'm just going to see if it actually goes up to that point. We still have one more 15-minute candle left. Okay, so close these in profits, and let's see how this candle closes. 1350. And then if you look at 5 minute has a big wick. So these wicks may symbolize that it's going to continue to move down. And we have more wicks, and okay, let's let this candle close. Okay. See what happens now? If you would have taken a sell here, watching that, okay, it's going down, but it continued to move up, so we're just going to wait. Now we are testing this trend line, and I'm going to take a sell here because we have this 5-minute candle. And 5-minute candle, actually, let's slow it down a little bit and then take 3 sells and draw a trend line. Now, what I'm looking for is this trend line to be broken. Trend line to be broken because we have a lot of selling pressure coming. Even on the 1 hour, we have a lot of selling pressure coming. So I want this trend line to be broken. If this trend line is broken, gold is going to take a big shift. You know, if it breaks the trend line, gold is taking a big dump. So I'm going to let the trend line broken, and how far it's going to go, let's see, it might go till, let's aim for this wick. Let's aim for this wick over here, because this is a nice wick range. This is a nice wick range here. This area here. Let me take some more cells there, and I'm going to draw this wick range. Shapes, wicks, and I'm going to draw this wick range over here. This wick range over here. This is a range. So we're going to TP right over here. This is what? 300 pips, because price is moving fast. So we could hit that. You know, you never know. We could hit that. Look at the 30-minute. If we break this trend line, we're moving down. We're moving down. What was this price? 1349. Let's aim for 1350. Let's be safe. Let's not be greedy. Let's be safe. 1350. 1350. Yeah, see, that's a good range. Because we have these wicks over here, we have these wicks over here, and this range has to be filled. Okay, so let's go back to 15-minute, and let's take some cells. Because we still have one more 15-minute candle left. 15, okay. Let's draw our 1350 right over here. Once this trend line is broken, we are moving down for sure, and I'm going to let some positions ride once this trend line is broken. $13.50. Can we get $13.50? $13.50 is what we need. $13.50 to fill these wicks. $13.50. Fill these wicks. $13.50. $13.50. Can we get $13.50? We have $13.50. So we close some positions. Close 190 pips. We got 199, 190, 190 pips. Close these positions, and then look at 5 minutes, and we have broken the trend line, and we will continue to go down because we have broken this trend line. So let's see where we stop. Let's see how far this is. This is 200 pips. I think we can go down to that area. Just gotta wait for this candle to close, and then I think I should take more sells on the next 15-minute candle. let's look at 5 minutes. Now, at this point, I'm just managing my trades. Really, I'm just managing my trades. I have 30 seconds left for the new 5-minute candle. We have retracement. Let's look at 5 minutes and see where we are retracing so that we know what zones are we in. Okay, so we are in this zone over here, and this is a consolidation area. This is a consolidation area, so price might consolidate here and then continue to move down. If it's going to move down. So can we get 1347? 1347 right over here, this area. So let's take 3 cells. Oh wow, just dropped. And we will get 1347. 1347. 1347. Can we get 1347? And we have 1347. 1347. Okay, let's pause this right here. Pause this right here. And I'm going to close my positions. Bent 16K, and let's do over here. Okay, so now you see the reason why I closed is because we filled these wicks. Fill these wicks, fill these ranges, and it's all dependent on how we grab the premium price, then it continued to move down. It was all technicals. Like, I don't know what the news was, just waiting for the this trend line to break. Once this trend line was broken, we were going down. Now, the next 15 minutes, I am sure is going to also continue down. So I'm not going to take any trades because this is all done. So I'm just gonna see what happens, how the next 15 minutes is formed. So the next 15 minutes might have like a top wick and then continue move down. Let's look at 1 hour. 1 hour, the new 1 hour just formed, maybe. Let's see. Let's take a look. Nope, the new 1 hour is going to be formed after this candle. And then I'm going to try to see if we can fill the range. We are moving up. Okay, so the new 15-minute candle is forming. Now, there's a lot of selling pressure. There's a lot of selling pressure on the 1 hour. So what my bet is that this will continue to fall down. This is what I think. This will continue to fall down and it will fill this range on the 1 hour, mind you guys. On the 1 hour, it will, I think it will still fill this range. So we're just going to let this run and see what happens. Because when price is in momentum, it fills ranges. Look at 4 hour, because new 4 hour is formed, and the 4 hour has a lot of selling pressure, and this has to go down because if we draw a trend line, it has to fill the range, and if it breaks the trend line, we're going down. There's no other option for gold to go. It's going to shit itself, and we did fill the range on the 1 hour. Actually, this is what I mean by filling ranges. Once price is in momentum, it's going to fill the ranges. And this range was 300 pips, right? Now, the reason I didn't take a sell over here because it's not a part of my trading plan. Okay, it's not a part of my trading plan because I only take trades if they are some time apart. I'm not gonna take a trade back to back. Never am I gonna take a trade back to back. I'm always gonna like step away from the charts for like 30 minutes or 1 hour, and then I'm gonna take the next trade. Because I don't want to take impulsive trades at all. So we're just going to let this run. Okay, and let's let this run. This is actually the 10-15 candle. This is the 10-15 candle. Yeah, guys, so this is all the trades I take. 2 trades in the Asian. I take 2 trades in the New York session, New York Open. What I look for, like you guys see, I look at all time frames. And then I try to take a reversal trade at around 11 a.m. Eastern. So I'm just going to take a look over here and then see if we still have some time left. Let's let these candles develop. Question? No question. Now we'll try to see if I can take a reversal trade here, the way we take it on the wicks, so people know. So let's see over here. Let's see if we are actually forming some wicking. 30-minute, we are forming a wicks, and we are in a support area. We are in a support area, and we are forming wicks. So I guess we could take a buy here soon. So what would I use? Example, yeah, I just fill ranges. I just fill ranges. You know, that's all I do. I just fill ranges. So I'm gonna take a buy over here, and take a buy over here because I'm being impatient, and you know, I'm being impatient. It's just to buys because sometimes I'm the worst trader in the world. You know, you guys want to know I'm like the worst trader in the world. I take like impulsive buys and stuff like that. So let's see how this goes. Take some more buys because I believe we're going to wick here and then we're going to move up. The reason why is because we have higher highs. No, we have higher lows. You go in 5-minute and oh, what is this? We have wicks and then we have this consolidation. And if you look to the left, you can't look to the left. Why is that? Because this is not enabled. You look to the left and you see we are in a zone which has some consolidation. This is a good supply and demand zone. I don't know what supply and demand is, if it's support and resistance, but that's all I know. And then, you know, you see these wicks. We had a push down, and then we have a reversal. Like, you know, because these wicks indicate that there's going to be a move up. You see this wick, so we're just gonna go with it. We're just gonna see how this all develops. See how 15 minutes develop, because I want this 15-minute to go up and then, you know, continue moving up. So the new 15-minute candle formed, and look at 5-minute. Now the new 15-minute candle. Now if you look at the 15-minute candle, you can safely see that. Take more buys. You can safely see that, okay, this might fill this range. You know, this might fill this. It might fill this candle range, but we are creating higher lows. You know, and then we are creating higher lows on the 5-minute. We have this buying candle, which means the next 5-minute candle, if it's going to go up, it's going to fill this range over here. Okay, this is 1344. It will fill this range, and 1 hour, the new 1 hour candle just started, so it might wick down and move up, or like, you know, it could just move up. So we're just gonna wait and see if the 5-minute fills the range. I wish I would have taken 10 more buys, but okay, we're moving down. I just don't want my stop loss to be hit. 1344. Can we get 1344? 1344. Someone have 1344 for me. 1344. Okay, if it goes down, I'm going to take more buys, but let's let this candle develop. 1344. We have 1344. It filled this range, the 5-minute. So there's a lot of buying pressure on the 5-minute, so it's going to continue up. 1 hour has created a wick. The 30-minute, you could see these wicks, and we have created higher highs, right? So gold is going to the sky, you know. So on next retracement, you could just Now, here's how the mental part, the mental game comes into play. If you know the price is going to go your way, why not just hammer it? Like, you know, it's all in your head. Why not just hammer it if you know the price is going to your way? So take some buys, and then you know your stop loss. That's it. Just manage your trades and just have fun with it. I have a question. You don't see it filling that range, that 1 hour wick range, since 1 hour has strong bearish body. Okay, so the question is that since the 1 hour has a strong bearish body, it's not filling that range. It's not filling that range because for the 1 hour to fill this range, this big move has to develop. This big move has to develop on the smaller time frames first. Because if you look at the smaller time frame, let's look at the 30-minute time frame. On the 30-minute, there's a selling pressure, but the 30-minute candle closed a bullish candle, right? So on the smaller time frame, the move has already started to get bullish, right? So if you look at 15-minute, the move has started to get bullish because we have these wicks. On the 5-minute, the move, it's like we have consolidation. We have consolidation here, right? So that's why the 1 hour is not going to fill that wick, because you're looking at smaller time frames to see where the moves are beginning, right? So now I'm just going to let this run, and let's see if we can take more buys. And this is how I trade live, you know, to be honest. This is how I trade live. I just let go. Like, I'm not even running those many positions. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. I only have 18 lots running. Okay, so are we going to break this? Are we going to break this? Perfect. Perfect. So 100 pips, I close. 100 pips, I close. Close 94, 93, I close. 120, I close. I'm going to close half of them. And then I'm going to put them every one at break even, the rest of them. And then I'm going to let them run. Let them run till my stop loss hits or whatever. Or 100 pips, you know, that's it. 100 pips reached. And then I close. And that's my fourth trade. And then I wait for the next Asian session. This is all I do. This is all I do. And then if you look at, actually let's let this run, because this is the first 15-minute candle. And then on 30-minute, you could see that we're no longer going down, because on the smaller time frames, we saw that, okay, we are not going to go down because the move has already begun in an uptrend. And that is why. You know, so now I'm open for questions. We're open for questions if there are any. Okay, perfect. So no questions here. There were actually some questions I had then before. I'm just going to bring them up over here really quick. Okay, speechless. Yeah, it just comes with practice. To be honest, it comes with practice. Now, the first question I had was that my trade runs in profit and then it hits my stop loss. What should I do? Follow your trading plan, and it's not going to hit your stop loss. Trade 3 to 4 times a day. Like, just trade 4 times a day, and then that's it. You don't need to trade. You don't need to take 5 trades or 10 trades. It's just overtrade. Don't overtrade, and your stop losses are not going to be hit. How exactly do we use pre-market futures for gold? Pre-market futures, you can see those at, if you go to Google, all you gotta do is write CNBC
pre-markets. So I said you write pre-markets, and then from 9 a.m. you could see that if the pre-markets are up, based on your confluences and the candles, gold is going to go down, or UJ is going to go up, right? And then if pre-markets are down, it's going to be the opposite. That's how you base the pre-markets. And then what is your golden trade? The one that you know will almost give you what you're looking for. The trades I just took right now. Okay, I have another question. How many positions do you recommend per entry? It depends on the account. Example, make a trading plan. It's based on your trading plan, and your risk tolerance. I have a higher risk tolerance than most people, so it just depends on those. Let's see, I have another question. No, I guess this is it. These are, I think, no one has any more questions here. Let's see this. So, another question. So, you can go against the higher time frame trend if you are at a strong support resistance area and wicks are formed. Yes. So, the question is basically, so you're going against the trend on the higher time frames. Yes, the reason why, because I'm looking at the smaller time frames, because you can catch moves early on the smaller time frames. That's the only reason I'm going against the higher time frame trend. If you look at the 4 hour, the 4 hour formed bearish, but look at this wick. How big is this wick? This wick is Jesus, this wick is like 350 pips, right? And if you look at smaller time frames, it makes more sense that, okay, we have higher lows, it's going up. You look at 5 minute, we have higher lows, and then it's going up. So that's why you look at smaller time frames to catch the moves early. And then, okay, depends on the trading plan. So, yes, trading plan. Have a trading plan, guys. The main thing you can do, the best thing for yourself you can do is to have a trading plan. It's very, very important. Trading plan is going to save you money in the long run. It's going to save you a bunch of money. Have a trading plan. Trading plan is a must. Questions. Which months are bad months to trade from your opinion? I don't look at months. I look at wicks. I look at 5 minute, and then I trade. I don't look at months. I sometimes look at news to tell me like what's going on. I look at trend lines. The trend lines break, they will continue to fall down. There was a really good example on trend line breaks on UJ. It was like last week. I missed it. I saw this happen, but I missed it. It was a downtrend trend line. Price moved up, broke this trend line, and then moved up. I've never traded a bullish move from a trend line, so I wasn't aware of this. But now I am. And how do you deal with emotions? How do you manage emotions? How to stay calm even the price goes against your analysis? Great question. Great question. Here's the thing. Managing emotions, it depends on the lot sizes you are using. Like, I remember for 2 weeks, I was trading 10-cent lots on gold. For 2 weeks straight, I was trading 10-cent lots because I was building my confidence. Like, I had like zero idea how to trade gold. So I was building my confidence. I was trying to make sure that I can catch at least 100 pips from 1 cent. As I started to catch 100 pips, I was also starting to get comfortable with the drawdowns I was getting. As I got comfortable with the drawdowns, I knew that, okay, like I can get a 150 pip drawdown, or I can get like a 100 pip drawdown per position, and that's okay. And once my confidence starts to go up, I started to increase my lot sizes. It's just the same thing as we go back to the working out example. Like when you're working out, every day or like every week, you're increasing the intensity. Trading is the same way. You are increasing your lot sizes, which means you are increasing your intensity of trading. You're increasing that
that you're pushing your mental barriers every day. Because let's say if your account is at 50K, right, and you're using $1 lots, that's the same thing as using a 10-cent lot at $5,000, right? So you need to push your mental barriers every day, slowly, you know, and it all comes down to like how confident you are, how good you know your pair. Because let's say if you're trading 5 pairs, you're not going to have the same confidence as you're trading one pair every day for a year. This makes sense? I hope this makes sense because it makes sense to me. You know, if it makes sense, it makes money, and then that makes more sense. Since the market can behave confusing, it is better to watch for the news of the day. And yes, always, always, always look for the news. And don't worry, Xavier, we're going to get a Spanish guy to translate this for you. Okay, perfect. So I guess that was it for today. It's a Sunday. I was up early, so I have a lot of things to do now. After this, we're done. The recording will be available in the drive, and I hope we can do another webinar next week, and then we can get more, I guess we can refine on the strategy even better. Okay, guys, I'll see you guys later. Have a great Sunday, and let's kill the markets this week.